What's going on, my friends? It's your friend Jack here, and today we're going to be looking at the difference between cryptocurrency and stocks. I have an article pulled up by PayPal. We're going to be looking it over, but I'm also going to be adding my own personal thoughts to this just because I do think cryptocurrency is a great opportunity for many people. But as always, none of this is financial advice, and you should always understand what you're investing into, whether it be cryptocurrency, stocks, or whatever else. Always understand what you're getting yourself into, and I would never recommend that you do put in more than you're afraid to lose. So if you don't want to lose that money, don't put it in, all right? That's just what I'm saying, okay? Just what I'm saying. What do I know, though? I'm only 21 years old, and, I'm a noob. Anyways, the original goal for creators of cryptocurrency was for crypto to one day become a currency that is commonly accepted as cash and credit. That's the goal of cryptocurrency. The goal is to be an actual currency, a better version of the current currency we have called fiat currency, aka a dollar or a buck, a US dollar, Canadian dollar, the paper money, right? That isn't really backed by anything. Paper money used to be backed by gold, but they've taken that out. They can essentially just print as much money as they want, which is kind of concerning. And you definitely probably have noticed this concern in the past year with the coronavirus coming around and just booping that print of money right up the walls. Whether you're in Canada, the States, or wherever else, you are going to probably have heard about it. Anyways, this is not financial advice, as I mentioned here, and you should consider talking to a professional advisor of your choice to make decisions. Obviously, you probably should do that. You shouldn't just take my word for it, take someone else's word for it. Seek a professional or do your own due diligence at least, but this is not financial advice whatsoever. So, when you buy crypto, you own a certain amount of that digital currency. Someday it may be possible to use crypto in transactions as easily as other currencies. Someday. So right now, it's really not. We're hoping that it will be. We, as in people who like crypto, and we are hoping that it does get to that point. But right now, it's not. And stocks are offered by companies as equities or ownership in that equity or ownership in the company. So you're investing in a company in terms of they do well, you do well. That's basically the terms of it. Cryptocurrency is different. Cryptocurrency goes up and down like crazy, like 20%, 30% in a day, right? This can happen, and there's a lot of different influences for this, a lot of different reasons for it, but it can happen, especially in the smaller cryptocurrencies that aren't as, well known. Those ones are even more risky. So always understand what you're investing into, especially if it's going to be cryptocurrencies. Look at the project, look at what you're doing, and try to get a good understanding before you even get your foot in the water. That would be my recommendation, not financial advice, just my recommendation. However, they say crypto's gained a reputation for sudden drastic changes. This is true, very volatile. Stocks, on the other hand, are directly linked to companies that must publicly and regularly share how they've been doing and how they expect to do in the future. So stocks are more based off realistic expectations or, how well a company's doing, where crypto's not backed by a company. It's decentralized, and it's not really dependent on a company doing well. It's really if people like it and people are willing to hold it, it's going to do better. And this is kind of a weird concept to understand and wrap your head around. I still have to wrap my head around it, but that's how it is. It's kind of weird. And things like crypto aren't really governed, right? So crypto markets, there's no really big authority, as I mentioned here, and you do have to be careful because someone could steal your crypto, and it's hard to really get it back. It's hard to get any government action on that because things happen like this, and because it's a decentralized system, you have to be extra careful. You have to take care of what you're doing with crypto, how you're storing it, who's storing it for you, all that kind of thing. And you do have to look into really what are you getting into? You gotta know some things. There are definitely different ways to get into crypto. Some are a lot easier than others. There is brokerages that don't give you access to your crypto and they hold it all for you. You just put the fiat money in, the US dollar, Canadian dollar, the euro, the pound, right? You just put your money in and they take care of all that. That's one way to invest in it, but you don't have access to move it from place to place. So it's really not your direct crypto, but it's still a way to make profits from the investment that is cryptocurrencies. Anyways, that's pretty much the whole video today. I just wanted to cover the main differences between the two. Stocks, a lot more slow and steady. Crypto, a lot more risky, but a lot more reward there. And there's going to be highs and lows in crypto. that are crazy. The stock market might crash one day, right? And it goes back up, but the crypto market crashes every day and goes back up every day. It's kind of weird in terms of percentage wise. The cryptocurrency market is like the stock market times by 10 years. So it's very volatile. But I just wanted to show the differences today in this video. Hope you guys enjoyed this wherever you're from. Thank you guys so much for watching, and I appreciate your support. See you guys in the next video. Peace out. Keep learning, keep earning.